morning, Stuart.
Good morning. How are you guys?
Good. What are we talking about today?
Well, we're talking about purchases, and this is a big factor now because the purchase market in St. Louis is hot. Hot.
Right.
So one of the things you want to do is when you go and you're going to look at houses and you're going to make a contract on a house, they're going to want a pre-approval letter. Now, most lending institutions will give you a pre-approval letter for whatever they think or whatever you want to get pre-approved for.
Right.
But it's a little bit dangerous because if you're going to go ahead and make an offer on a house for $300,000 and you have a pre-approval letter for $400,000, what are you telling the seller? You're telling the seller you're approved for more than what you're offering.
Right.
I've had sellers call me from mentioning this on the show, and they say they've actually used that when they receive pre-approval letters higher from what the offer is being made to try to leverage
Right.
a higher purchase price. So what we do is we issue pre-approval letters every single time you make an offer based on the offer that you're going to make. So the seller has no idea what you're actually approved for, and they're more inclined to take your offer.
So if I'm buying a house for $300,000, you'll give me a letter saying I'm approved for $300,000.
Right, we'll give you a letter of $300,000. If there's a counter offer for $310,000 and the seller wants an updated pre-approval, we'll give you another one for $310,000. So we keep giving it to you. It's a little bit more work for us,
Right.
but it's better for you, the buyer. So that's the first thing you need to know about.
All right. Now, what about PMI?
Well, there are programs out there. All mortgage companies or many mortgage companies push low down payment programs, specifically the FHA program. Now, FHA is a terrible program because the government charges you a huge fee that they tag on to the loan, and the monthly PMI that you pay is higher than a conventional loan. And if you borrow more than 90%, I know it's all confusing, but if you borrow more than 90%, that PMI never goes away. It stays on there forever. There are conventional products that you can put down less than the FHA amounts, no big fee to the government, and an actual lower payment than what FHA would offer, even though the FHA rate is a little bit less than what the conventional rate would be. So don't always look at the rate. Look at the annual percentage rate, what your payment is at the end of the day, and that's the program you want to pick.
And look at the fees.
Right. If you're borrowing more than $150,000 on a purchase, we're the only ones in St. Louis that I'm aware of.
Right.
We have no lender fees, so you won't pay any underwriting fee, processing fee. They call them junk fees, points, broker fee, any of those fees. There's no fees at all. So especially if you're a first-time home buyer and you're looking for that extra $50 or $1,000 or $2,000, $3,000 that you're going to need, this will save you money.
Yeah. We all hear about the no fees. All that means is you jack up the rates. That's how you get around it.
Last purchase that we did, actually, a real estate agent had referred the customer to their particular lender.
Yeah.
After the transaction that we had on that particular lender, we went ahead and we did the transaction. Now that real estate agent is referring all their business to us. And she said, your rate was 0.25% better. My lender had $2,297 in lender fees. You had none. I'm sending you all my business from now on.
Well, there you go. How are we doing on rates?
Rates are the highest that they've been in 4 years. There is talk in the Federal Reserve, June is the next meeting, about whether they are or aren't going to raise those rates. Their concern is that the economy is overheating. So the Federal Reserve tends to raise those interest rates to slow things down so we can keep up with the pace of growth. If they feel that the economy is, in fact, overheating at that fast of a pace, instead of raising it 3 times this year, they're going to raise it 4 times this year. The markets are already adjusting. We already see rates in the mid to upper 4s and climbing. So take advantage of the opportunity, whether you're refinancing or buying, and do it now.
That's why you call Stuart at Stuart's American Mortgage. 314...
324-4440.
Or Google Bagel Loan, right?
Yeah, just Google Bagel Loan, goes right to our website.
And when's Mortgages and More on the Big 550 KTRS?
Sundays at 9 a.m.
Ladies and gentlemen, Stuart at Stuart's American Mortgage, Stuart'sAMC.com. No fees and better rates. Have a good day.